Welcome to Oregon Cash Flow Pro. My name is James Barber. I'm always here to help you maximize your cash flow. Today we're going to be going over my IUL policies. This is, well, some of my IUL policies. This is year 5. We just passed our year 5 anniversary. You can check out my prior year updates right up here. We've got 3 policies to look at today for this 5-year update. So let's see where we're at. Here we go. This is our first one. You can see we've got an accumulated value of $8,535, surrender value of $8,184. So we're in year 5. There are still some surrender charges associated with this policy. A surrender charge is just an amount of money that's withheld from your actual accumulated value in case you decide to cancel the policy early. So it's not very much by this point in here. And what we have available to us is the surrender value. So if we want to actually just quit the policy, walk away, give me my money back, I'm going to go do something else with it, that's the surrender value. Now what's available for loans is real close to that surrender value. You can see right here. So I don't currently have a loan out. I got about 18 cents to pay back from a prior loan. But you can see almost all of that surrender value is available to borrow. Now let's look here. How's my policy actually been doing? Well, since 2018, my average return, 6.19%. That's not too bad. I'm actually pretty happy with that. With most IUL illustrations, if we have a good designed policy, we should see a break even around year 5, meaning we've got more cash available in the policy than we've paid into it, if we've been averaging more than 6%. Even more so with our policies these days, which have bonuses associated with them. In this case, I got this policy before bonuses became very popular. And I also don't have access to uncapped index options. So I'm only using the S&P 500 index option, annual point-to-point with a cap. And this is our average. This is the total amount that we've earned in interest since that time. And let's go down here, and we can see here total premiums paid $84.43. $84.43.70, and our cash value is $85.35. So we passed our break even. Yay. Last year, I was actually contemplating doing a 1035 exchange with this policy into another one. And I didn't end up doing it, but what I did do is I delayed funding it until most of the way through the year. So I didn't get any advantage of adding any extra funds last year. We should see some gains next year if the S&P again performs. So that's where we're at for this one. Let's take a look at the next one. Here's the next policy. We're at 91.60. Accumulated value 87.99. Surrender value, you can see our death benefit, 209. Now with this one, so this is over the last year, what we earned in interest. Let's go to the beginning of the policy. And there we go, slightly less than the other one, 6.15%. Still respectable, I'm still happy with that. And what's available to borrow? Almost that full amount. Again, I have a small payoff, just a few pennies that I didn't quite get paid off. But it is available to borrow if I need it. And total paid into this policy, $91.03. So you can see we're past the break even on this policy now as well. And let's take a look at the last one. So those first 2 were on my daughters. This one is on me. We've got a 31,000. Now this one, I actually passed the surrender value, I passed the break-even point after year 3 because we had a couple of really good years to start off with. I think I was averaging 9% at that time, which allowed us to break even by year 3. Let's take a look. at our long-term average here. We're at 6.62. So we've got a bit more money in this. We've earned a bit more. And this one I funded right at the beginning of the prior year because I wasn't planning on doing a 1035 exchange with this one. Total interest earned over that time period, $5,238. And our total premiums paid, $30,355. So you can see we're a bit above that at this point. So overall, I'm pretty happy with where we're at. These are long-term policies. You know, the reason we get these is because we want that downside protection with the upside potential. Averaging 6% or over 6%, I'm pretty happy with that. We have a death benefit in case tragedy happens. We do have living benefits that are available. And of course, our cash value is available if we need it. So my surrender value here is lower because I do have a loan outstanding with this one. So this is not due to surrender charges. My surrender charge is actually pretty low. You can see my surrender charge here. It's only $500 here in year 5, but my loan payoff is $24,000. So this is a great place to borrow money from. If you've been shopping around for a loan at all, where are you getting 4.6% right now? There isn't really anywhere that we're going to be getting 4.6%. Even my home equity line of credit right now is like almost 9, if not 9%. So this one's pretty attractive. And the type of loan that I have here does not impact my growth. So my growth is still going to happen based on the accumulated value and what's in my index options. So let's hope for good market returns in the future. And I will update you next year on this policy. Now, I do have other policies. Be sure to hit the subscribe button and ding that notification bell so you get notified when I do my other updates. We are going to start putting out quite a bit more videos this year as well. So we took quite a bit of time off this last year in order to help work on building and educating our team. And we are going to get back to making videos because there's a lot of information out there that people are getting that I don't quite agree with. There's a lot of misinformation, I think, being put out there. Not necessarily on purpose, but our goal on this channel is to help educate as well as provide the best designed life insurance policies. So if you're in the market for a life insurance policy, be sure to schedule a meeting with me so that we can at least show you what we think is the absolute best designs. And why, and the reason why I say why we think, like, they are actually the best designs, but you're going to find there's a lot of arguments out there that will try to support a higher expense design. And I generally don't agree with that approach. I think the lower the expenses that we can get inside of our policies, the higher likelihood of success, which is what we're here for.
I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.